Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program today, Anthony Milewski. He's a managing director at Pala Investments, which is a $2 billion AUM fund focused on the resource space, as well as chairman of Cobalt 27. Anthony, welcome back to the program.
Hey, Colin. Thanks a lot for having me.
Anthony, you are an expert on everything that has to do with the EV revolution. This encompasses quite a few commodities now. Obviously, we're talking about lithium, cobalt, graphite, nickel, copper, and probably a list that will continue to grow. This is an exciting space in an otherwise bleak commodity market for the past few years, and it seems to continue picking up steam. So I want to start by just getting your take on all of the announcements from car makers and from China coming out about intentions with electric vehicles moving forward.
Yeah, no, sure. Look, I appreciate the opportunity to be back on your show and to talk more about electric vehicles. So since we've last spoke, I would just say that the acceleration of the electric vehicle penetration and adoption rate has only continued. You know, you've seen major announcements from multiple automakers talking about having, in some cases, all of their vehicles be electric by a certain date. You've seen China now guide towards a percentage of their overall market being electric. You've seen India put out an announcement by, I believe, 2030. They want their entire new sales fleet to be electric. And so, you know, what we've really seen in the last few months is an acceleration of this theme where countries and corporations are really jumping on board and driving the adoption of really a revolutionary technology that is going to change not only the automobile markets, but it's also going to change the energy markets, and it's going to impact the lives of people living in cities and around roads in terms of air pollution. So this is technology that's changing industry, and it's also going to change a number of commodities markets over time.
Anthony, investors have a bit of trouble wrapping their head around the size of these markets and the impact that the EVs and batteries are going to actually have on these specific metals. And without that knowledge, it's hard to understand just what kind of move that these commodities could see. I want to go through each specific metal and talk about what you see the timeline being and the actual amount of demand added to the global production. So let's start with cobalt and go from there.
Yeah, sure. No, thanks. So cobalt today is a 100,000 metric ton market, with roughly 50% of that going into batteries in general. That would include cell phone batteries. And, you know, if you look at the consensus penetration rates for electric vehicles in 2025, you have a range, you know, kind of anywhere from 6 to 15%. If you say take kind of 10 to 12%, you're talking about needing somewhere between 200 and 250,000 metric tons of cobalt in 2025. So to put that in perspective, you're going to need 2.5 times the current market, with 100% of it going into the electric vehicle batteries. Now, that's not realistic. I think we all know that. But even if we achieve a fraction of that, you're talking about a structural change in the cobalt market. Technology will advance, chemistries will change. Even if we acknowledge all of that, this is going to materially impact cobalt, and it's going to materially impact the way it's traded, the way it's mined. And so there's no getting around it that there's going to be disruption within the cobalt market.
Anthony, what kind of prices would you potentially be looking at for cobalt if those numbers are met? And I know it's impossible to come up with the price of a commodity because there's so many factors that go into it, but certainly you've had to look at some sensitivities and come up with ideas.
Yeah, it's hard to give an exact number, but simple supply-demand analysis, would just lead you to believe that cobalt, like all the commodities we'll talk about today, have an incentive price, and in order to actually incent production, you need to go well beyond that price. And by the way, I don't just mean the creation of new mines; I just mean an incentive price for technology changes and new technology. So I wouldn't speculate on an exact price, except to say that if the electric vehicle rate if the penetration rate truly was kind of 10 to 15% in 2025, you would be looking at a materially higher cobalt price.
Excellent. Well, let's shift over to nickel. What most people don't even know that nickel goes into electric vehicles, let alone how much of it. So, what is nickel's actual use, and what does the market look like for it?
So actually, and interestingly, nickel is probably, it's hard to say which metal is the most important because they're all important. But when you think about battery chemistries and the makeup of cathodes, you talk about a nickel manganese cobalt formulation, which is by far the most common formulation. And you talk about ratios. So the current ratio is 5:3. That's 5-part nickel, 2-part manganese, 3-part cobalt. The current kind of rollout of the next generation is a 6:2. That means 6-part nickel, 2-part manganese, 2-part cobalt. The generation after this generation, which is kind of 3 to 5 years out, is an 8:1:1. 8-part nickel, 1-part manganese, 1-part cobalt. So, what you can see is as you shift units away from manganese and cobalt, you're shifting those units into nickel. So you simply don't have an electric vehicle without nickel. Now, nickel is a big, deep liquid market with a huge number of products. And what we've already actually seen happen in the nickel market, and it's really interesting to kind of think about the implications of this, is a bifurcation in the nickel market. So you have sulfide, and then you have kind of like the pig iron, to just generalize here. You sort of have two markets forming, which is the sulfide markets and then like the pig iron markets. And what's interesting is that the type of nickel that goes into a battery is kind of called class 1 nickel. And, currently, the uses for that besides electric vehicles include things like alloying and different uses in the stainless industry. But what you're going to see over time in 2025 again is if these penetration rates that we're talking about hold true, you're going to be talking about, well over 50%, maybe even like 75% of the sulfide market being consumed by electric vehicle batteries. And people say, well, this is a big market, and it's possible to shift around nickel units. And the reality is, it's a lot more complex than that. It's very expensive to take, if even possible, to take, say, Indonesian or Philippine production, and then somehow refine those units and create class 1 nickel. It's not that it's impossible; it's the cost associated with it. Another really kind of important aspect of the whole EV revolution, and one of the drivers behind it, of course, is the environment. And in particular in China, I don't know if you've been to Beijing, but it's really, really a major problem there, the air pollution. And so one of the interesting things that's happened even in the last 48 hours is China has come out and shut down over the next 4 months effectively 6% of global nickel production, 2% annualized, by shutting down nickel pig iron refineries. Like what that means is effectively what you do is you dig up this dirt, if you want to visualize it, you lay coking coal over it and you burn it, and it kind of burns all the junk off of it, and then they take what's left and then they use it for pig iron. They've taken 6% over the next 4 months offline, saying we don't want all that crap getting burned up and causing more pollution. So just to bring that back around, these other units that over time could potentially, with a certain premium, be brought into the class 1 nickel market aren't going to be there. So you have this unique dynamic whereby you have a bifurcation of the nickel market. You have a class 1 nickel, which is going to be consumed by the electric vehicle market. And you have, kind of a response in China saying, well, by the way, this other type of nickel is really bad for the environment, so we don't want that to expand anyway. So you're going to find that the nickel market, much like first the lithium market and then the cobalt market, is going to really take off in certain subsectors of the nickel market. And I think it's a really interesting place to be for investors as well. I think there's a number of ways to play that. And unlike say cobalt and lithium, where you've seen a move, I think that we're really just sitting at the front of the nickel move.
Bifurcation means to me that not all nickel is created equal, and so investors looking to take advantage of what you see coming in the nickel market are going to have to be selective and understanding of what kind of deposits are going to be used for these batteries. Do you have any specific ways that you're looking at playing that space right now, or are you still on the hunt for that?
No, absolutely. So I think I would break it down into a few different categories of investing. So we'll start at the top. If you want to own a large liquid name, if you want to own something that you can trade huge amount of volume of, I think you own Norilsk. This is like, I think it's the largest sulfate deposit in the world. I mean, this is a massive, massive deposit. It's a huge big cap name, and you can trade it. And, they have a partnership with BASF on their nickel and cobalt. And this is a name that will give you, beta to the theme. So I think that's, on the one extreme end, you can be the biggest pension fund in the world and own Norilsk. On the other extreme end, I like a company like a Giga Metals. So, I think it has something like an $8 million market cap. It has, I believe, the fifth largest sulfate, nickel cobalt deposit in the world. It's in Canada, and it's a huge option on this move that's coming, right? So, when you think about all these battery metals, a very important topic is security of supply. Where is the deposit? Is it in Australia? Is it in Canada? Is it in Russia? Where is this thing based? So, another thing that this little Giga story has going for it is it's huge. I think it's, like I said, the fifth largest in the world, and it's in Canada. So on the other extreme end, if you're a retail investor and you want to have huge leverage, if you look at the comps around a story like that, I mean, this is kind of a, potentially a once in a cycle buy, a name like that. If you cycle into the middle of the range, there are names like Independence in Western areas that have kind of, a couple billion Australian market cap that also give you leverage to that nickel story. And so as an investor, I think it kind of depends on what you're after. Maybe you own a basket, you own some Norilsk, and then you definitely own, some of the mid-range stuff with Torque. And then I think you have to take, a small cap name like a Giga where, you could see a 10 or 20x on that name when the nickel price finally comes our way.
Anthony, let's talk about copper. Copper is necessary in any world that has electricity, of course. And I want to understand what kind of impact on the copper market, which is a pretty big market, that this move towards electric vehicles could have.
So ultimately, it's going to have a huge impact on copper. But in my view, copper is going to be the last story to move. And that's because you're going to need that buildup of electric vehicles to really start to see the impact on copper. I mean, copper is a deep, big, liquid market. And by the way, it's generally a market in equilibrium. And so even a few % change in demand has a big impact on price. To me, I should step back and say, copper by weight is the single largest component of the basic materials inside of one of these vehicles. So, this is going to be a major aspect of the story. It's just that in the early days, the smaller markets, the cobalts and lithiums of the world, they're impacted faster because this incremental new demand as we sell these EVs, it impacts them much quicker and much swifter. For copper, it's going to be a big buildup. So if you walk through it, you had lithium initially, cobalt is underway now. The story is happening. Nickel, I think we're at the front of it, and it's about to see a move. You've seen the bifurcation of the nickel market. You see a premium for certain brands of nickel products that go directly into the battery industry. And, the next stage of this, which, by the way, might be a couple years out, is going to be copper. So it's an evolution through the cycle. And as you move forward, it doesn't mean that the demand falls off in any way for any of the previous commodities. Instead, it's compounding, and it just takes longer for the compounding effect on copper because it's such a big market. I think the other thing for copper, which is really interesting, is, what is the meaning of the infrastructure changes that are going to happen on copper? And I think people and analysts are still trying to figure that out. I think there are all these kind of conflicting thoughts that you have to make sense of. For instance, you're charging your car at night when there's less stress on the grid, generally speaking. Maybe that's true for America. So maybe, the copper build out required is further, say, take some countries and in other parts of the world where maybe they don't have the grid infrastructure, so maybe the copper infrastructure need would be sooner. So I think this wild card for copper, of course, is ultimately grid demand, and if it exceeds expectations, that impact on copper could actually be brought forward sooner. The other thing which is interesting about copper is it's such a big and liquid market that hedge funds and pension funds are more apt to play the copper market. So, if you're running billions of dollars, it's very tricky for you to own, that many lithium and nickel and cobalt names because, daily liquidity is an issue for you and positioning size is an issue for you. And so you can only own so much of that. But the copper market is so big and there's so many different ways to play it that you can actually, to speak, in fun parlance, you can express a view. And so even though copper is a few years out, you may find that copper moves ahead of its time simply because large hedge funds are able to position themselves in a big way sooner. So that's kind of an interesting aspect of copper.
Excellent, Anthony. Well, let's go over a couple other metals that come to mind when thinking about this space. Graphite's been around for quite some time and had its day in the sun, and also the commodities manganese and vanadium come up from time to time. Can you explain the three of those and your thoughts?
Sure. So, look, graphite for me is interesting, but I think I almost just categorize it as an industrial mineral. There are a couple companies out there, Syrah and some of these other ones that, they're great companies and Mason Graphite, and there's a handful of them. But for me, because of the way the graphite supply-demand balance is, in other words, there are multiple deposits around the world that could produce a multiple of the entire world's consumption annually. To me, it's really about, who's in production first, who gets the offtakes first, and then, defensive pricing to keep people out of building more projects. So I find that graphite is interesting, but I personally think of it more as a industrial mineral in terms of investing than I do as an electric vehicle metal. Now, notwithstanding that point, it does go into electric vehicles, but I don't see the torque and leverage in graphite names that I see in, cobalt, nickel, lithium, and copper over time. So as to your other questions, today we've talked about electric vehicles. We've actually, and maybe we'll have to talk about this another time, but we've kind of omitted what is probably going to be an even bigger story, which is the structural change in the energy markets. And that's going to start with people having solar roofs and battery packs on the side of their house. And ultimately, the first mover has been Tesla, although there's other movers and they're using the lithium-ion battery. That's for domestic consumption. You asked specifically on vanadium. That change and the battery technology that we're seeing now is going to really probably result in a variety of batteries depending on your use case. So the lithium-ion battery is going to be great for your home. However, for commercial installations, large subdivisions, for a mine in a remote location in Congo, something like a vanadium redox battery is potentially far more interesting. Now, just to visualize it, a lithium-ion battery that fits on the side of your house is only a couple feet wide and maybe 5 feet tall. It's tiny and thin. A vanadium redox battery is like a multi-story house. It's a big, huge, complex thing. And so it's really suited for industrial usage. So I think that technologies like that, in addition, and strangely, lead is another one that may benefit from this kind of this what should we call change in the energy markets, simply because the lead acid battery is also interesting. So I think a host of commodities outside of just lithium, the lithium complex, will benefit. One nuance to vanadium, and I think it's worth thinking about, especially if you're investing in vanadium, is you don't want vanadium to run, the price of vanadium to run too hard too soon. And the reason is as follows. If any particular component of a lithium-ion battery runs extremely hard right now, you're kind of captive for anywhere from 7 to 10 years with the battery structure that we have. It's basically impossible to engineer out any of these components immediately. I mean, I think that is impossible. And if you really want to do it, it's going to take, like I said, 8 to 10 years, depending on who you talk to. And even then, you're talking about reducing the amounts, not eliminating them. With vanadium, what I would say is you don't have widespread adoption yet And so if vanadium ran too hard too quickly, what could happen is it could be the technology that time leaves behind. And so while I think it has a bright future and I'm excited about it, I get a little bit worried when I see that run in vanadium ahead of a bunch of commercial users actually adopting that battery. Now, as an aside, one thing that could overcome that run is vanadium, unlike the lithium-ion battery, you can actually lease vanadium. There's a different model there. And so if that model were to actually be adopted and implemented, it would make vanadium cheaper because, at the end of the life of a vanadium redox battery, you can effectively recycle the whole thing. Whereas with the lithium-ion battery, it's simply not economic and very, very challenging to recycle those batteries currently.
Anthony, I appreciate you coming on the program. Palisade Radio is really all about educating viewers, and you're an expert in this space and shared a lot of knowledge that we haven't been able to share on the program yet. Further to that point, we've been doing some talking about having you produce a monthly column on Palisade Research to discuss all the different trends you see evolving in this EV and battery market. So we're looking forward to pushing that out to our subscriber base. Thank you so much for coming back on the program, and we'll get you back here soon.
All right. I appreciate your time. Thanks a lot, Colin, and enjoyed it, and always happy to field questions.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be? It actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?